Alrighty, family, peace, love, and law. Welcome to In God We Trust Academy podcast. This is the Lawman series. How y'all doing today? Make sure you guys are liking and subscribing, sharing, whatever you got to be able to do. We got a few more minutes before we get started. And we're going to be waiting on you guys. We got about, 4 more minutes? Yeah. How y'all doing? Y'all good up in here today?
Yes, sir. Everything excellent, brother.
No complaints from you.
Living, man. No complaints, none whatsoever. No reason to complain. Sir, a few more seconds, guys. In the meantime, we still got a major sale going on. 4 recordings for only $60. Learn to navigate civil cases, family. So this is a great educational, 4 educational videos that will definitely help you survive in those civil cases, for sure. But they are still available. They will be going until June the 1st as well. And we also got still 10% off on all of the ebooks. You got to the 27th on that as well. InGodWeTrustAcademy.com is where you need to meet us at. And don't forget about June the 27th coming up next month. We will be in the Atlanta area in Marietta, Georgia. And $100 for the live stream, $125 in person. Majority status, rights, due process, jurisdiction, legal remedies, constitutional enforcement. We're going to talk about it all, guys, and definitely going to be for you to elevate. We're here to make sure that you elevate, man. That is the primary. And don't forget, June the 7th, we have a Declaration of Trust class coming. June the 7th. $20 to get in too, guys. So just know you got till the 6th, June the 6th. So that'll be next Sunday. And we'll be ready for you guys. Hope y'all are ready. Already have done everything I need to do on my end, and I'm ready and prepared for you guys for that day. So again, it's $20. And it's going to fill up fast. I'm telling you that now. So you get in, you don't. And that's not my fault. So $20 to get in, and it does come with 2 raffle tickets, etc. So you will have a chance at a free car as well too. Yep, it's coming. All right. So now that you know what your opportunities are, hope we see you there. Remember the website is ingodwetrustacademy.com. People asking me, am I taking any consultations? Yes, yes, all the time. Just literally go to our website and you can sign up for the consultations. Always available. Emergencies, whether it's emergency consultations as well too. We do handle all of those as well. But I'm glad everybody is definitely having a great day so far from what I've heard. Y'all good, y'all up, you're moving around. And let's get started. So we're going to hit this record button and we're going to jump on into our session today. It's been raining so much up here, man. A whole lot. All right, guys. Welcome to In God We Trust Academy, the Lawman podcast series, guys. And we just want to appreciate you for everything that you do and being here with us as always, man. It's just such a great time to be here and be alive and be around like-minded people who is willing to learn, to elevate themselves, and to make sure that we continue to pass this on to help create just general people with real, true understanding of the law and operate in a form of morality that needs to be placed here on this realm today. And we give all praise to the Almighty to everything that has transpired to this moment, allowing us this moment and still being able to do the things that we do. All right. Everything that you guys hear from this point forward, educational and religious purposes only. So anybody seeking any form of legal advice, please do seek a legal advisor. All right. So what's up? Anybody got anything they want to tell us today? Do y'all got a testimony going on today? Anybody? Now's your chance to speak. I got a couple people say they got testimonies. They're supposed to pop in for y'all today. But we'll see if they do. But right now, do anybody got any? Me and Mel got some testimonies, man. We've been wiping the floor with a lot of people on TikTok.
Come on now.
Hey, it get wild over there, boy. But nah, man, it's been a journey, like just being able to go through these specific things. And what you start to see is, like I keep saying, I'm going to always use the law. And we can point it out, we can prove it, we can show it, and that's where we leave it at from there. It's really no argument from that point on. I mean, because now authority kicks in, and the only thing you can do is comply. There's no way around it. So it's been a journey on that, though. But we be live on there. Y'all better start getting on there with us. But what's up, though? What you got going, bro?
I ain't gonna say this always a testimony, but I had told you on TikTok, I had went back through the 2024 trust class, and I actually went through with my mother. She's 70 years young, and she didn't understand all of it, but I went back through the whole thing with her, and just last night, we really set up everything. But I done broke 2 of my iPhones. I had to order another iPhone, so I had wrote a lot of the notes in there. But I right now, before like the end of this week, we're going to Alabama because my granddaddy about to be 93. So we're gonna go down there and kick it with him. But we're going to the recorder's office this week to record not all the documents, a couple of them in the county, and we're gonna send off the bonds for the indemnity bond and the offset secure bond, and do the 1099A. And I also did her conveyance of certificated security. So I'm just happy to do that with her. And we also did the declaration of trust for the family and stuff. So I was just happy to do that part with her and just to get the stuff connected more.
That's a beautiful testimony, bro. I know what that feels like, so I understand. Yeah. That's a great testimony. Just to be able to sit down with your family and gain the understanding to be willing to move and do something like that. A lot of people be scared to move, so just to have the trust and faith in you to do so, bro, that's a beautiful testimony, straight up.
No, I appreciate you, brother.
All love, all love. Anybody else with us? Anybody else with us got them one of them what they call one of them testimonies. Boy, it been so many people telling me I'm gonna call y'all. I'm gonna start calling y'all on the phone, putting y'all on the spot. Send me record it for me so we can let the class hear it because y'all be missing when it come time for it. Where y'all at? But as soon as I get on TikTok tonight, they gonna tell me, man. But it's all good. I understand. We all got stuff that's going on, other things that comes to happen. Trust me, I know. I get sideswiped sometimes where I can't even come in here and do this with y'all sometimes, but it is what it is. Today we're gonna finish up the Lawman Master Merchant Tax Series, Volume 10. So it is the Master Tax Filer Operating System. All right, y'all ready to dive in this? Y'all cool with that today?
Let's do it.
Who that? Ricardo? What's up, Ricardo?
What's up? How you doing, OG?
Everything good, bro. Everything good your way?
Yeah, just tired. A lot of working and staying up, trying to learn, and taking my time throughout the nighttime. Because in the daytime, there's a lot of kids moving around and stuff. So I tutor them throughout the day, and then I tutor myself throughout the night.
Ain't nothing wrong with that. Ain't nothing wrong with that. As long as we can go, we going. When your body say let down, then you'll take the rest. You will definitely take the rest. And you can't fight that. It will shut you down. But make sure you stay in good health, everybody. And let's get started. All right, so the purpose is to convert tax knowledge into closed loop operating system that makes filing decisions automatic, defensible, and repeatable year after year. Okay? So, determining whether any filing is required at all. A filing obligation exists only when imposed by statute or regulation upon a person or entity that falls squarely within the scope of the law. A filing obligation does not arise from prior behavior, prior filing, professional advice, soft prompts, administrative convenience, or expectations created by third parties. The Internal Revenue Code does not impose a universal annual filing requirement. Instead, filing duties arise conditionally and only upon the occurrence of legally defined triggering events. A filing habit is the repetition of prior filings without reestablishing whether a present year obligation exists. So filing habits are created when individuals or fiduciaries assume that because a return was filed in a previous year, a return must be filed again. And this assumption has no statutory basis. So each tax year stands alone. Obligation must be established anew for reporting period. Okay? So prior compliance does not create future duty. Before any form is prepared, opened, downloaded, or populated, the burden of proof must be placed correctly, and the filer does not bear the initial burden to prove that a filing obligation exists. The obligation must be traceable to a statute that applies to the filer and the filer's present capacity for the present year based on present facts. If no statute imposes a duty to file, no action is required. Voluntarily filing where no obligation exists creates records, admissions, classifications, and presumptions that did not previously exist and cannot be undone. So the decision to file is therefore not procedural, it is jurisdictional. Preparing a return before confirming obligation reverse the proper order of analysis and places the filer in a defensive posture unnecessarily, and you do not want to do that. So status does not persist automatically from year to year. Filing status, taxpayer classification, and reporting posture are not permanent conditions. They exist only so long as the facts that created them continue to exist. And as we know, when it comes to statutes, something has to trigger a statute for it to take in effect. So that means that there has to be an event that happens, etc., right? So a status change occurs only when a legal cognizable event alters the filer's relationship to income, asset, entities, or obligation. Examples include a change in capacity, a change in ownership, a change in control, a change in entity structure, a change in source of receipts, or the occurrence of a taxable event defined by law. Status does not change because of administrative convenience, platform labeling, third party reporting, or informal use of funds. If no triggering event has occurred, status remains unchanged by operation of law. That's very important for you to know. Okay. But that goes back to us having an understanding of classification. You have to classify, right? You got to classify yourself. And if you do not classify, then that's where you're going to literally mess up everything that you got going, and you're not going to have, any documentation that is consistent and accurate because you didn't classify anything. So it's very important that you do. Thresholds are statutory filters that determine whether reporting obligations activate. So thresholds must be met before any filing requirement exists. Income thresholds are not the same as gross receipts. Gross receipts describes money movement. Income describes legally recognized gain. Confusing the two is primary source of unnecessary filings and over reporting. Threshold analysis must occur at the correct level. Entity level thresholds apply to entities. Individual thresholds applies to individual. Trust level thresholds applies to trust. Mixing thresholds across level is improper and leads to false obligations. Many items commonly mistaken as taxable events do not satisfy threshold requirements because no taxable event occurred. Right? So reimbursement, return of capitals, loan proceeds, fiduciary receipts, and control funds, and internal allocations do not constitute income unless the law specifically recharacterizes them. Labeling by banks, platforms, or counterparties does not override statutory definitions ever. So threshold gatekeeping functions as a hard stop. If thresholds are not met, then the analysis ends. Okay? So the decision tree, yes, no, not yet. Once obligation, status, and thresholds are analyzed, the filing decision resolves mechanically into one of the three outcomes. File now applies only where a statute imposes a present year filing obligation, thresholds are met, status is confirmed, and no lawful alternative exists. Okay, file later applies where an obligation may arise but has not yet matured. This includes situations involving deferred recognition, unresolved allocations, pending distributions, or timing rules that postpones reporting. Then do not file applies where no statute imposes a duty, thresholds are not met, or no taxable event has occurred. Every decision must be documented internally. Documentation is not for the government. It is for control. The internal record must show the analyst performed, the facts relied upon, the statutory basis for the decision, and the final determination. This record is archived and preserved. It is not attached to any return. It is not disclosed unless lawfully compelled. Okay? So it's very important that you know that. So who files what and who never files? An individual may act in more than one lawful capacity, but only one capacity governs tax reporting at any given moment. The tax system does not attach to the human being in the abstract. It only attaches to a person or entity acting in a capacity recognized by statute. The failure to distinguish capacity is the primary cause of improper filings and duplicate reporting and personal exposure. An individual acting in a purely personal capacity is subject to filing obligations only when statutory thresholds are met and a taxable event has occurred. An individual acting as a fiduciary does not report fiduciary receipts as personal income because the individual is not the owner of the funds. Ownership, not possession or control, determines reporting responsibility. Acting as a trustee, manager, or agent does not convert estate or entity income into individual income. An individual is effectively invisible to the tax system where no obligation exists for the year, when no taxable event has occurred, or when all receipts handled by the individual are received strictly in a fiduciary or agency capacity. Visibility is created by filings, elections, and voluntary disclosures, not by existence of activity alone. Silence preserves invisibility where no duty to speak exists. So identity blending is disallowed. This includes treating fiduciary receipts as personal income, paying personal obligations directly from entity or trust account without proper allocation, or reporting entity activity or individual returns without statutory authority. The individual capacity flow, therefore, begins with a single determination. In what capacity was the individual acting when the event occurred? If the answer is fiduciary or agent, the individual does not file on that event. If the answer is personal and all statutory elements are met, filing proceeds. No other path is lawful. A trust is a separate legal estate. It does not inherit filing obligations from the trustee, the grantor, or the beneficiary. A trust files only when the Internal Revenue Code imposes a filing requirement on the trust itself based on the trust classification. See, we always start with classification. The income, characterization, and reporting thresholds for the year in question. So, grantor versus non-grantor status is a legal determination based on retained powers and statutory attributions, not on labels, intent, or administrative preference. So, the determinations controls where income is reportable, but it does not create income where none exists. So, stop making income exist when it don't exist. But you will never know if you don't first classify. Right? A trust files only when it has reportable income, meets filing threshold, and is required by statute to file for the year. A trust does not file merely because it exists, hold assets, or engage in internal administration. Trust that holds asset receives non-taxable receipts, manage corpus, or act as holding vehicles may have no filing at all. Filing in the absence of obligation creates record that mischaracterize the estate. A trust never filed when it has no reportable income, when all receipts are non-taxable by law, or when statutory thresholds are not met. Silence in these circumstances is lawful and correct. No explanation is owed. You don't owe nothing. So income ownership and income reporting are not the same concept. Ownership determines who ultimately bears tax responsibility when income exists. Reporting determines who files when the law requiring a filing. A trust may own income that is reported elsewhere, or may report income it does not distribute, right? So now these determinations are mechanical and statute driven, not discretionary. So the trust filing architecture therefore requires that ownership, reporting obligations, and timing be analyzed separately. Conflating them produces over-reporting and structural failure. LLCs and other organizations are filing tools, not automatic taxpayer. Their tax treatment depends entirely on classification, elections, ownership structure, and statutory routing rules. An entity may exist operationally without existing taxably. So disregard entity mechanics operate by law as well, not by choice. So unless an election is made where an entity is disregarded for tax purposes, it does not file its own income tax return unless specifically required. Its activity is reported at the level mandated by statute, not by convenience. However, disregarded status does not eliminate record keeping, nor does it authorize capacity blending. So make sure. A flow-through structure transmit income to owners when income exists and recognition is required. Flow around structures route operational activity through entities without transmitting taxable income because ownership, control, or characterization prevents recognition at that level. The distinction is critical. Not all money moving through an entity is income, and not all entities that handle money create reportable events. Very important that you know that because, well, as we have talked about, there can be some things that's delayed. Just because money goes into a trust and then the trust might have to distribute that money on a certain year, right? And that money is set aside, but the beneficiary has not received the distribution of that either. So it's not a taxable event at this moment, right? So upon the year where it does transfer to that individual, the beneficiary, then that is the year that it becomes a form of taxable event. Only if it's income, though. Okay, we got to make sure we understand that, which is accession to wealth, etc. So entities may exist to contract, hold assets, employ labor, or operate platforms without creating taxable income at the entity level or at an owner level. Filing obligations arise only when statutory conditions are satisfied. Filing simply because an entity has activity is improper. All right. Multiple entity coordination. So, where multiple entities, trust, and individuals interact, coordination is mandatory. The same dollar may not be reported twice. Duplicate reporting is not compliance, it is an error. So, preventing duplication requires clear assignment of ownership, proper routing of receipts, and disciplined adherence to capacity. Mismatch creation occurs when one party reports income that another party also reports, when information returns do not align with filings, or when entities report activities inconsistent with ownership records. Mismatch triggers an automated enforcement regardless of correctness. Avoidance of mismatches is therefore structural, not argumentative. So make sure that you have everything done properly. Proper documentation helps defeat all of this. Okay. Always. Non-taxable event filters, excuse me. Accession screening. Taxation does not attach to money. Taxation attaches only to a legally recognized accession to wealth. An accession exists only when a taxpayer obtained dominion and control over property or funds in such a way that the law recognizes an increase in wealth that is both realized and not excluded. Without accession, there is no income, and without income, no reporting obligation exists. So return of capital does not constitute accession. Where funds are received that merely restore previously invested capital, principal, or basis, no increase in wealth occurs. The recipient is returned to a prior position, not elevated to a new one. Reporting return of capital as income converts neutral transactions into taxable events improperly and destroys basis integrity. Debt proceeds do not constitute accession. Loan proceeds create an obligation to repay equal to the amount received. Because the recipient's net position does not improve, no accession occurs. The presence of repayment liability negates income characterization regardless of how the funds are deposited, labeled, or used. Earnings arise only when repayment obligation is absent and wealth increases. Accession screening must occur before classification. So if accession does not exist, analysis stops. No recognition, no reporting, and no explanation is required. Proceeding past this point without accession creates false income and permanent record contamination. So even where accession exists, income is not taxable unless it is recognized under law. So recognition is legal event governed by statute, not a factual assumption based on receipt or timing. Many accessions are expressly excluded from recognition or deferred to a later period. Non-recognition events occur when the law explicitly removes the accession from current taxation. Examples include certain exchanges, contributions, internal transfers, and restructurings that the law treat as continuity rather than realization. These events do not enter gross income and must never be reported as such. So make sure you have that understanding as well. Just because you see money move doesn't mean that there is a tax. So deferred recognition events occur where accession exists, but taxation is postponed by statute. Timing controls recognition, not receipt. So that's just like I was saying. Just because the trust receives some money, it could be holding $50,000, but it's supposed to distribute to the beneficiaries 3 years from now. So that's a delay. So there is no taxation at this particular time. All right. Now, let's just say if you let someone borrow that money, etc., then even that, it's loan proceeds, anything of that nature, still not an accession to wealth, especially if you got to pay it back type thing. So it's like you just have to understand literally how to work internally and making sure everything is properly documented when it comes to your trust and things of that nature. Because if not, yeah, you're going to run into some problems. And you might be claiming things that are taxable and you need to classify. Classification is still the number one thing. Classification of person, activity, and transaction. Those three things will always matter. And until you do that and you start recognizing that, you might be hurting yourself in taxation more than anything. It's very important that you understand it. And nothing beats documentation. All you need is documentation to show something is meant to do some form of purpose. And if it's actually spent out of that account for that particular activity, et cetera, then guess what? It's a non-taxable event. Everything that's documented in proof is going to show that. That's all they're going to look at. Does it pass this particular test? So make sure that you understand that. All right. Fiduciary activity does not create personal income. A fiduciary who receives, controls, or disperses funds on behalf of an estate, trust, or principal does not own those funds. Ownership, not custody or control, determines income characterization. All right. Trust principal is not fiduciary income. Movements of corpus, reallocations of principals, asset conversions, and internal transfers do not create income merely because they are handled by a trustee or fiduciary. Reporting principal movement as income collapses distinction between estate and person. Controlled funds are not owned funds. Where funds are received subject to restriction, obligation, earmarking, or fiduciary duty, they do not constitute income to the controller. Administrative authority does not equal beneficial ownership. Administrative receipts, reimbursement, advances, escrow funds, and trust level operational receipts do not become income simply because they pass through an account. Characterization depends on legal ownership and statutory inclusion, not physical receipt. Fiduciary exclusions operate as hard barrier. Funds that fall ownership that fails ownership tests are excluded before an income analysis occurs. Treating fiduciary funds as income is structural error and not a reporting choice. So payment processors, banks, and platforms routinely mislabel funds. They use internal classification designed for operational convenience, not legal accuracy. And these labels have no authority to determination, tax treatment, and do not override statutory definitions of income. So when you really listen to what's being said, is taxation voluntary? Absolutely. Because it's you who is supposed to be classifying all of this. And if you do it correctly and classify things, then most of the stuff that we do is really non-taxable events because it's really not accessions to wealth. That's the reason why, like, when you start removing yourself from ownership, where is the taxation? And then if you learn to, like, okay, for instance, let's say if you making some type of money based upon something you invested in. And in this particular transaction, you only take the money that you invested in. So let's say if you invested 10 grand, and then let's say in your investment, you made 80 grand. So let's say you only take 10 grand and the rest of it is gifted to a foundation, etc. Now I see all that other money is like, you see what I'm saying? The 70 grand is literally non-taxable. And if it's a foundation that you set up that helps serves a purpose, then it's all, you get what I'm saying? Now we're talking about the activity that the money is being used for. Now, based upon the classification of the activity, it's still non-taxable. You didn't see. That's the reason why, like, man, like it's so easy to understand. If you only take back what you put in, and then the rest of the money it shifts and goes somewhere else, and it's received as a contribution, as a gift type situation, you have to understand, like, there's no accession to wealth in that, none whatsoever. And then, of course, people set up foundations, nonprofits, etc., that help serve them and their people. That's how they move a lot of money around. And it still serves them. I don't think y'all quiet in here. Y'all ain't hear me today.
Yo, we don't even pay on the 10K either, right? Not the 70 or the 10K, right?
Yeah. That's just one of those things.
Listening.
It's just one of those things that you got to really have an understanding. And all of it is all about how you set everything up. Estate and planning. How is everything structured? Right? Trust plus individual coordination. A trust and an individual are separate legal actors. Coordination begins and ends with enforcing capacity at all times. An individual may act for a trust only in a fiduciary capacity authorized by governing instrument. When acting as a fiduciary, the individual does not act personally and does not acquire ownership of trust property, funds, or rights. An individual acting as fiduciary executes documents, receives funds, and disperses assets solely on behalf of the estate. These acts do not convert estate activity into personal activity. The law recognizes the estate as the principal and the fiduciary as the administrator. Any failure to enforce the distinction collapses the separation and exposes the individual to reclassification. Because what you have to understand is anytime that there's a merger of title, it collapses the trust. So if the trustee and the beneficiary are one and the same, then there's the trust collapses. There is full outright ownership. There is no such thing as a trust, meaning that that someone gave something to somebody else for the benefit of another. That doesn't exist if you are the outright owner as the trustee and beneficiary. You the full ownership now. So that means when the legal and equitable title merge together, then the trust collapse all day. So you have to be careful of that as well. All right. Fiduciary never acts on behalf of themselves while acting for the estate, signing in individual capacity on estate matters, depositing estate funds into personal accounts, or paying personal obligations directly from estate accounts without allocation violates capacity enforcement. These behavior creates commingling, which is not cured by intent, explanation, or after the fact documentation. Capacity enforcement is not optional and is not situational. Every action is taken to declare capacity, supported by authority, recorded accordingly. Where capacity cannot be clearly identified, the action does not occur. Expenses must be allocated based on legal responsibility, not convenience. Personal expenses are borne by the individual, right? Trust expenses are borne by the trust. Payment sources does not control characterization, and legal obligation controls allocation. Reimbursement is improper when no personal expenses was incurred. A fiduciary may not reimburse themselves for costs that were always trust obligations. Doing so mischaracterizes trust administration as personal expenditure and creates false income or deduction as well. So make sure that you are doing proper administration. It's always going to matter, right? Legal ownership determines tax consequences. Beneficial use does not create ownership and does not generate income. A trust may permit an individual to use trust-owned assets without transferring ownership or triggering a taxable event. Use of trust property for authorized purposes does not constitute compensation, distribution, or income unless the law expressly recharacterizes the use as such. The mere enjoyment or utilization of trust asset is not income when permitted under the trust instrument and supported by fiduciary authority, right? It's just one of those things. All right. So control of assets in a fiduciary capacity does not equate to personal ownership. Trustees hold title or control for the benefit of the estate. Treating controlled assets as personal property destroys the estate boundary and invites piercing. All right. So let me help you guys understand this because words matters. You have to pay attention to what's being said. Word in context literally matters. All right. What I said is you can be a trustee and a beneficiary if the beneficiary only has equitable interest to use something. That means the trust still owns it and you just have equitable interest to use something, not own. So, but if you have the legal title as the trustee and if you have the equitable title as a beneficiary in ownership because it's being distributed to you in that manner, then it's going to collapse the trust. It's a difference than having ownership and then just interest to use, equitable interest as a beneficiary to use the trust assets, as it was just speaking. So that's why it matters to the word. The words matter. I promise they do. Distributions trigger reporting only when the law recognizes them as taxable events. Not all distributions are taxable and not all transfers constitute distribution. Timing controls whether a reporting obligation arises. Distributions do not trigger reporting where they represent non-taxable transfers of principal. Authorized payments, or non-recognized movements under governing law. Reporting arises only when income is distributed and recognized by statute. So timing strategy does not involve concealment or manipulation. It involves lawful adherence to recognition rules, accelerating or delaying distributions within statutory limits is permitted and does not constitute evasions. Ignoring timing rules creates premature or improper reporting. So instead of you, let's say, for instance, if money needs to go to the beneficiary, what you have to do is say the beneficiary don't even own the money. The money that has came in is being used in ways of gifting and contributing to something, like whether it's contributing to the education. So if you was to give money to the beneficiary who has the right to use the assets, right, which is even if it's money for the purpose of education, right, that is literally a trust duty. So now it's not the beneficiary owning the money. The trust still owns the money, but it was only distributed to the beneficiary, not for ownership, but for the equitable use that it has to use that particular asset of the trust to fund its education. So now that's a non-taxable event still. Do y'all understand what I just said?
Yes.
Yeah, I'm getting that.
That matters. Because what we did was classification of person, transaction, and the activity itself, right? It all matters. And who bears the outright full ownership. So there would be no taxation upon the beneficiary, none whatsoever. All right. So how money moves without becoming income. A lawful commercial system begins with correct placement of control. The apex position is reserved for the entity that owns asset, intellectual property, contractual rights, and economic interests. Operating entities do not exist to own wealth. They exist to perform functions. Confusing ownership with operation is the primary cause of misclassification and overreporting. The trust function as the apex controller because it is the legal estate designed to hold property, receive value, and allocate benefits according to governing instruments. Ownership at the trust level ensures continuity, control, and proper classification of receipts. The trust does not operate day-to-day commerce unless expressly structured to do so. It governs, right? Operating entities function as tools. They contract, market, process transactions, and perform services. They do not own the underlying intellectual property unless expressly assigned. They do not own receipts unless the law requires recognition at that level. Their role is execution, not accumulation. Intellectual property placement is determinative. IP generates value. Whoever owns IP, which is intellectual property, owns the income stream associated with it when recognition occurs. Placing intellectual property at the holding level prevents fragmentation, prevents misattribution, and ensures that operational revenue does not become operational income by default. Licensing replaces ownership at the operating level. So this structure ensures that money movement follows in ownership, not activity. Activity alone does not create income. Ownership controls characterization. And that's the reason why they're able to put certain things out in front in public that operates, but they don't really own any of the assets. The assets or the money, etc., is going to be going into some entity that has the less and least possible taxation. That's what they're going to transfer it to every time. That's where the money ends at. All these other things are just a front. That's the reason why you can have $1 billion company, you would say, that never pay taxes because it don't own the money. The money just flows through its account or something of that nature, but the assets, et cetera, it does not belong to the public outfront company. Never does. Never does. And if it do, that just means that person has not fully learn the game in certain type of ways yet, which they will eventually. But payment routing determines whether receipts land, not what they are. Receipt locations does not determine income characterization. Ownership and obligation determine characterization. Routing must therefore be designed before transactions occurs. Funds may be received by operating entities acting as collection agents, processors, or administrator. Receipt by an agent does not confirm ownership. Funds received subject to obligation, restriction, or contractual duty are not income to the receiver. But again, that literally has to be documented that someone has the power to receive something on behalf of the trust through this specific account. Documentation, again, beats any form of allegations. I want you to understand that. Recording responsibility follows ownership. The entity that owns the underlying right records the receipt as part of its ledger. And even if the funds pass through another account, the entity that merely processes or handles funds records activity, not income. Sometimes entities never report funds as income because they never own the funds. Administrative conduits, service operators, and processing entities exist to facilitate commerce, not to accumulate taxable income. Reporting by such entities creates false income and mismatched exposure. Routing mechanics must be documented through governing agreements. Without documentation, routing defaults to ownership assumptions imposed by third parties. Proper routing prevents income from attaching where it does not belong. Very important. Licensing and employment are not interchangeable. Employment creates wages. Wages create withholding, payroll obligations, and personal income. Licensing creates contractual compensation governed by agreement terms and ownership rights. Service agreements define scope, authority, and compensation without creating employment relationships. Where services are rendered under contract, compensation is paid pursuant to agreement, not as wages. Control over characterization begins at contract formation. Employment reclassification occurs when control, dependency, or compensation structure mirrors employment despite labels. Avoidance of reclassification is structural, not rhetorical. Independent authority defines scope, absence of payroll treatment, and proper invoicing preserves non-employment status. Characterization is controlled by facts and agreements, not intent. Compensation paid for license use of intellectual property is not wages. Compensation paid for contracted services is not wages. All right. Unless statutory elements are met, misclassification converts lawful business architecture into payroll exposure. Licensing preserves separation between ownership and operation. Employment collapses it. The system must be built accordingly. So, merchant accounts and payment platforms are tools, not principles. They facilitate transactions but do not determine ownership of funds or tax characterization. Platform terms do not override law or governing agreements. Payment processors act as agents. They collect, hold temporarily, and disperse funds according to instructions. Their internal labels and reports are operational artifacts, not legal determination. So third-party over-reporting occurs when platform issues information returns based on gross movement without regard to ownership, agency, or non-taxable status. Preventing over-reporting requires correct entity placement, proper account naming, and documented agency relationships. Avoidance of over-reporting is achieved by structuring transactions so that platforms report activity consistent with ownership reality. Correcting errors are after reporting invites scrutiny and expands jurisdiction. So prevention occurs before the first transaction. Make sure you label right. It matters. Make sure that you are documenting everything properly. If you don't, and you're not classifying, you're going to mess up. Record keeping is the best. Make sure you keep records monthly, right? A lawful record keeping system is hierarchical. Records do not exist as isolated documents. They exist as a structured system that establishes ownership, authority, timing, classification without narrative explanation. The hierarchy determines which records control, which records merely support. The master ledger sits at the top of the hierarchy. It reflects ownership, capital structure, asset placement, and high-level financial position. The master ledger does not track transactional detail, right? It establishes who owns what, in what capacity, and under what authority. It is the reference points against which all other records are reconciled. Entity ledgers sit beneath the master ledger. Each entity maintains its own ledger reflecting only the activity that lawfully belongs to that entity. Entity ledgers do not attempt to explain ownership. They assume ownership has already been established at the master level. Their purpose is operational accuracy, not justification. Supporting journals sit beneath entity ledgers. Journals record transactional detail, timing, and classification. They exist to support ledger entries, not to replace them. Journals never override ledgers. Where a journal conflicts with the ledger controls and the journal is corrected. This hierarchy prevents contradictions. Contradiction creates audits. A properly layered system ensures that every number traces upward cleanly and that no record stands alone or speaks out of turn. Gotta have that discipline. Monthly accounting is mandatory for control. Annual accounting is merely a summary. Errors discovered annually are too late. Errors discovered monthly are isolated and corrected before they propagate. Monthly closes force classification discipline, right? Each monthly activity is characterized, reconciled, and locked. This prevents retroactive recharacterization and eliminates reliance on memory or reconstruction. Monthly closes also reveals anomalies early, where correction does not require explanation. Annual summaries are prepared only after monthly records reconcile to the master ledger. The annual summary does not create information, it aggregates already verified data. Preparing annual numbers without monthly reconciliation guarantees inconsistency and exposure. So do understand that. Documents are retained because the law requires them or because they prove ownership, authority, or classification. Documents are not retained for comfort, storytelling, or future explanation. So what must be kept includes governing instruments, ownership records, resolutions, contracts, ledgers, any reconciliations, filings that were lawfully required, and these documents establish structure compliance without commentary, right? Internal memoranda exist to guide administration, not to persuade outsiders. They are operational tools, not legal arguments. Their audience is internal fiduciaries only, so narratives create liability because they invite interpretation. Interpretation invites challenge. Records should show facts, classification, and authority without commentary. When records explain themselves, no explanation is required. So again, nothing beats your documentation. Make sure you have it, right? And when it comes to auditing, the only way to win is proper documentation. Seriously. You are not going to be, and this is the thing, you do less talking and more proof and showing by ledger. Once you show proof with the ledger, it's over with. And we have to have an understanding of that. All the extra stuff that you try to write in proof and say this, listen, just show proof by ledger. Because you are the main record holder and they don't have anything only thing they can do is put it to a test to see if it was done correctly and if everything was the way it was classified, that it shows up on paper as the same way. That's all they got, family. Do everybody understand that?
Gotcha.
Yes, got it.
Right? Lawful avoidance operates by structure, not concealment. It relies on correct classification, proper ownership, discipline, timing, and adherence to statutory requirements. Avoidance occurs when the law does not impose a tax or filing obligation, and the system respects that absence without manufacturing, activity to achieve it. No facts are hidden. No records are destroyed. No transactions are disguised. The system simply refrains from creating obligations that the law does not require. Evasion is defined by deception. It involves concealing facts that the law requires to be disclosed, misrepresenting ownership or activity, or taking affirmative steps to defeat a known legal duty. Evasion does not depend on outcome. It depends on conduct. A correct result reached by improper means is still unlawful. Structural compliance means that positions are achieved by entity placement, capacity enforcement, and accurate characterization before any reporting decision is made. There is no after-the-fact judgment to fit a desired outcome. There is no attempt to obscure reality. The structure reflects reality as defined by law. False statements are prohibited regardless of materiality. Any statement that is knowingly untrue, misleading, or incomplete when completeness is required undermines the entire system, and silence is lawful where permitted. Falsehood is never lawful. So don't fabricate transactions either because it's prohibited. Transaction must reflect real activity, real authority, real consideration. Creating paper activity without substance converts structure into artifice and destroys enforceability. Documentation must memorialize reality, not invent it ever, right? Trustee and fiduciaries are bound by duties of loyalty, care, and obedience to governing instruments. Authority must be exercised when the scope granted. Actions outside authority are avoidable and expose the fiduciary personally. So fiduciary liability attaches when the duties are breached, records are falsified, or estate assets are treated as personal property. Liability is not avoided by intent, belief, or advice received. It is avoided by discipline, adherence to authority, and also documentation. All right. Staying inside the law. Restraint preserves power because it preserves credibility. A system that files minimally, speaks rarely, and acts only when required attracts less scrutiny and survives longer. Expansion of activity increases exposure geometrically. Discipline limits exposure linearly. So overreach destroys defenses by inviting inquiry, excessive restructuring, unnecessary elections, aggressive timings, or needless complexity creates patterns that enforcement systems are designed to detect. Simplicity aligned with law is more durable than the complex chasing marginal gains. Long-term survival thinking governs every decision. The objective is not to win a single year, avoid a single tax, or defeat a single audit. The objective is continuity across years. Administrators and changing enforcement environments. Decisions are evaluated for durability, not novelty. So staying inside the law means accepting what the law requires and declining what it does not. All right. You have to be in control. Make sure you got a system that is constantly working for you. This is what is going to literally matter. I can't say this the most. And the hardest thing is to make sure that you got great record keeping and classifying this thing on a daily basis, because you have created a habit of not doing anything of like this nature. Even when it comes to you having trust. And even if you don't have a trust, you still need to do that with yourself so you can literally start tracing your finances, because that also leads to a person who is, those who really regulate their finances, have track of every single dollar and penny, they usually end up being millionaires and wealthy people. That's a fact. Because now you can operate, you can see what you have, you can maneuver properly and make, decisions that you can properly make. But when you can't see those things in front of you, it's going to make it hard for you to make accurate decisions based off what you have. Always. Right? Status preservation is deliberate maintenance of filers' lawful classification over time. Status does not drift by accident. It is altered by elections, filings, disclosure, and changes in facts. Many compliant failures occur not because the law changed, but because status was unintentionally altered through actions taken without analysis. So you need to be able to know if you're going to start whatever you're doing. If you got LLCs, you got a holding company, you got the trust, etc., all this stuff set up. You need to make sure that it is plainly structured and listed how things are to be transferred, where ownership actually relies, right? And again, without those things, if you're running everything through, and I'm saying this, even if I prefer you not do that, but even if you got something in your name specifically as a trustee and you're taking in the money, you need to have full documentation listed that between the trust gives you power to do so. That's going to clear a lot up for you, right? Do get a separate account, but I'm saying anything you do, it has to be documented, because there's a lot of times that they choose to hide the trust name. A lot of times they don't want the trust to be known, so they use a different name to take on the proceeds, etc., to keep the trust hidden. But then just like we've been stating all day, like if it's documented that you don't own these specific things, even though you have the power to run or receive as a receiver, it doesn't mean that you have outright ownership at all. So there is no reporting to you. I don't care if $1 million went through your account. It still don't belong to you. Right? So that just needs to be, make sure that we, understand that. Have a structure is everything. So a system that depends on single administrators fails. Long-term compliance requires planned succession and continuity of authority. Trustees, managers, and fiduciaries may change. The system must not. So have a system prepared for those who are successor trustees, etc. Easy, able to come in and follow. That means you need to have the right, proper documentation. If you know your trust is handling things for financial reasons or paying bills, etc., it needs to be forms that can be filled out for that particular reason to show this money was allocated here. This was done this every single month. That way, you ain't trying to wait and get it all up together, right? Now you got to go through thousands and thousands of transactions that's happened throughout the whole year when you could have already been prepared. So make sure it's already structured. They already have an understanding how it's supposed to be going. Now you can literally trace every single penny. And now the argument is not you writing paragraph after paragraph. That's not you're just going to show evidence. There's nothing else you need. Right? A master tax filer does not react to deadlines, notices, software prompts, or professional folklore. Every action is governed by law, structure, verified obligation. Filing is not an annual ritual. It is a conditional act performed only when required by statute. Where no obligation exists, silence is lawful and correct. No filing is made to maintain appearances, continuity, or perceived compliance. A master tax filer reports only what is legally taxable. Money movement is never assumed to be income. Only events recognized by law enter the reporting system. Assessments that fail recognition tests are excluded permanently. Returns reflect taxable reality, not gross activity, platform labels, or administrative convenience. Nothing is reported early, late, or voluntarily. Capacity is enforced without exception. Individual act as individual only when personally obligated. Fiduciaries act solely on behalf of estates and entities. Ownership, control, and authority are never blended. Every action is taken in declared capacity supported by governing documents. As I said, any action that you're going to be doing, especially with dealing with trust, it needs to be documented that you have the power to do so. If not, then there's where they get to make and run with their assumptions because you can have no proof of it. And that's where you start allowing them to reclassify you because you never fully classified for yourself, right? Defenses are preserved indefinitely. Status is protected from accidental elections and silent reclassification. Structure evolved deliberately without triggering scrutiny. Records survive personal charges. Each year resets to obligation analysts. No drift occurs. No surprises arise. The system remains lawful, repeatable, and enforceable across time. This is not tax reduction. This is tax control. And the master tax filer does not seek advantage. You enforces the law. That's what you do. So with that being said, everything is about structure. Do you fully understand the structure that you're putting together? Because just because you go get a trust, and a lot of people say, hey, I just want a trust. Okay, now do you understand the structure? Because now you got to have good record keeping. Operating from a trust requires that. So you need your full documentations to do that. Right? That's what you need to be able to do. Anybody got any questions? Any comments right now? Y'all been doing, y'all in here, we've been did trust. A lot of y'all put a trust together with y'all been doing good record keeping? Are you structured properly?
Keeping up with it, yeah, man. We got like 300. I'm to like 400 members on my stuff. But yeah, it's been working perfect for me, man. I highly appreciate that.
And as you can see, it just depends on how you do and how you say things. What is the money being put in for? Is it considered a gift? Accession to wealth. I keep saying this, right? You can go do anything, but it doesn't necessarily act like if you go, let's just say if you go and go out here to raise money for a foundation, right? Then it's not really an accession to wealth. Especially if you allow in certain donatives, stuff like that. Then also, even if it is considered a accession to wealth, doesn't mean that it could be taxed during that time. Now timing matters because it could be a delay, meaning that it doesn't distribute to the proper owner till maybe 6 months later, a year later, 2 years later, whatever. So now, if you're smart enough, that gives you time enough to do what? You got money to do certain things with. Yeah. But you got to make sure you do it properly. Make sure that any move that you make is going to be beneficial. You got to make sure you got good trustees. And a lot of people, just because they come out here and learn how to set up a trust, don't necessarily mean they're the best person to operate as trustees. You have to literally be an organized individual. And this is a very challenging task, even for, I mean, I'm organized, but this requires you to be super, super organized at all times. Not, oh, I forgot to do this today. No, you cannot forget to do. Now every aspect of your life is being centered and looked at as if it's like a business, etc. So it's very important that you look at it from that point because again, if you don't, this gonna lead you down a path that you're not ready for.
And the simple is it kind of just really like just bookkeeping like on every receipt you got, making sure you classify, right?
Right. Yeah, because I always say, like, nobody thinks about it. Everybody just hop up and say, hey, I'm finna go to the store. But who are you when you go to the store? You know what I'm saying? Like, you about to go spend some money in the store. You about to have a transaction, et cetera. Like, who are you during this particular time? Yeah, that matters. Then you got to classify the transaction. So the transaction itself, et cetera. Like, it all matters. So if you go into the store and you doing something, and if it's not personal, and if it's some form of entity, then now it can be classified as a business expense or trust business expense, etc. You see what I'm saying?
Do you keep all receipts?
Try to as much as possible. If you don't, then if you swiping, it's there. But that's why, like, if you gonna move with a trust, then you want to keep majority of your receipts. Absolutely. But the most beautiful thing that you can actually do to help you, they got like these different apps and programs that based on how you spend, where you spend, it will classify them for you based upon how much you spent out of this account, et cetera, for this amount of time. It's there. It'll do it all for you.
Right. That's the easiest thing to do. I use QuickBooks. I mean, it's a bunch of apps out there, but yeah, that's the easiest thing to do.
Yeah, it'll do it all for you. And then if it has an activity that it don't know about, it'll ask you to classify it. So what type of activity is this? It'll ask you. And it's doing everything according to what it's supposed to do, according to when it comes to taxation, helping you classify. Now it'll classify the transaction for you, but you're gonna need to be classifying everything else as far as what capacity was you in, et cetera. So all of that matters as well too. And, based upon the account that it's doing this to. So, but yeah, as much as possible as you can, keep every receipt. If they don't offer receipts, then you make sure that you can write down the transaction and what has who was paid, et cetera. You can write that down as records too. I mean, at the end of the day, you just need to make note of it. Because nobody else has firsthand knowledge about it as you. They're just going to put it to the test to see if that the classification is correct. And if you got like a couple minor little shit, they ain't worried about that. They looking for something that's way off. So that's a fact as well. They looking for something totally way off. But again, like this is all about how you move, family. There's no wrong way to literally put a trust together because a trust the way you want it is the way you want it. And everybody don't have to have the same type of trust either. Like your plan might not be their plan. And most people fight whether irrevocable or irrevocable. I mean, some people want to do revocable. They want to do it for a specific reason that fits their plan. It's okay. Some people strictly irrevocable. I understand that too. I like irrevocable. I understand it. I'm not afraid of it. I just have to, I have a true understanding that once I convey something into that trust, I need to make sure that I specify everything that needs to be specified in it, because once it leaves from the grantor, it goes specifically in ownership of the trust, and you have no longer any control or ownership over it in that way, in a beneficial interest way to yourself. Let me just put it like that. And now that's how you have to make sure that you specify what it's for, because then now the trustee gets to have a control and specify what it can be used for, etc. But each conveyance to me, each asset that goes into the trust is like its own sub trust based upon if the grantor gives specific instructions related to a the trust property. So now it that has its own trust and rules in relation to how to use or deal with this property. So yeah, you just make sure that you control that. The language itself is very important. It's not an easy task though, I promise you. But if you sit down, take your time and do it and stay on top of it, and create good habits of doing this, then it'll become easy for you. And now they got it to where you can it'll do it for you. I mean, the AI is out here to do so much. You can take your documents, load them up, tell it to calculate, create you a whole spreadsheet. But once you get done loading all your documents and transactions up, it'll do it for you. There's so many ways to do quick. You don't have to even go get certain accountants anymore. The way with all this stuff, you just need to make sure that you do it properly and make sure you just do it. I mean, that's what it takes. And most people don't, they create the trust, but they get lazy on the other part. And even when it comes to administrating the trust, private administration for people who have harmed the trust, etc., they get lazy on that. You got to be on top of your game in this. This ain't something that you just hop in and you can be ignorant in. Nah, you have to study and know every day. Strategy is also important as well. But you can't be a trustee over finances and you are financially illiterate. I don't understand. That ain't gonna work. And I damn sure ain't finna allow nobody to be a trustee that's financially illiterate. Not finna do that. Yeah, if anything, we're gonna go. I will make the trustee hire an accountant. That's who deal with our finances, not you. You just can sign off on certain things, but when it comes to money, et cetera, any type of investments and all that, nah, we're going over here to the person who knows, whom we gave some type of power to do so or contracted with. That's what matters, right? That's what's most important, because if not, like I'm telling you, then you putting yourself in a bad position. And there's a lot of people that, I always ask them, I was like, hey, you got a successor trustee or anything? No, God now. And I'd be like, yeah, it's probably gonna take you a long time. You're gonna need to be careful. Because I don't think you're ready for that type of work. And a lot of people are not. A lot of people who have done administrative work for companies, et cetera, they are great at it. They know exactly how to organize themselves to do everything that needs to be done. They've already had the experience to do it, and they know what to look for, and they can actually do it. But there are some people they're not administrators at all. And just because you're good at making money don't mean you're a good administrator or a good record keeper either. Right? Two total different things. Just because you're good at strategizing, investing, etc., does not mean that you are a good record keeper or you have good structure. So you're gonna literally have to you have to really recognize yourself, realize where you're weak at, and start working on that. Especially if you're gonna try to just do all this by yourself, then you have to be honest with yourself and where you lack. Start studying, developing yourself in skills in that, because if not, then you're gonna need to hire people. It's important. Don't hurt yourself because you just, I'm sovereign. And then we get to asking you questions, and then now you don't know how to classify a thing. And then you're gonna be wondering why, dang, they reclassified everything I did. They taxed they taxed me as an individual for every transaction. That's why it's important. Capacity, transaction, and activity. Those need to be classified anytime. Who are you? What is the activity? Transaction. What is the classification of it? And if you don't, this is where you start literally running into problems. So everything that you hear today, if you classify these things correctly, then all of these are non-taxable events. But if you do not classify these things correctly, then somebody's going to end up having to pay a tax somewhere down the road, wherever it ends as ownership. Whoever they want to consider it as having a cession of wealth. And usually that goes all the way down to the person who, well, just took on the ownership. Whether it's an entity or a living being, either or, doesn't matter. So make sure that y'all locked in on that part right there. And that's the reason why it's going to be important to be in the trust class that we got coming up for y'all. Yeah, we got a trust class coming up soon. Real soon. Let me see something right quick. And then this is I told y'all, and yeah, for $20, June the 7th. You need to make sure you classify, structure good. I know $20 sound like nothing, but trust me, this ebook is way worth more than $20, and what we're gonna be doing in there is too. But here's your chance. If you're interested in trust, yes, it's gonna require you to do some reading and some work. If that's not you, then yeah, you just need to go sit down with a lawyer. And y'all figure it out. Because even if I do a trust for you, you still got to go learn for you and do it yourself. So it ain't going to change because you come to me. All right, so we got the trust. It's ready. 173 pages. Jesus. Yeah, y'all thought it was going to be, a little 15-page book pamphlet? That's what y'all thought. Y'all got some work to do. Yeah, if you know me, I told you, I'm gonna make sure you get it all. So as you can see, this is the Declaration of Trust Special Edition. It's got over 20-something chapters in it, but we covering everything. We not holding back. Oh, it's worth it. It's just you just gonna have to do the work, right? So it's definitely there. And it will be a do-it-yourself. You will be able to put a trust together yourself once you're fully done with this and have a full understanding. Then yes, you should be able to do such. But yeah, this ain't nothing to take lightly. I want you to know that. Yes, you can purchase now. You can do that. Just inbox me, and then I'll send you the flyer. You do exactly what the flyers say, and we'll go from there. Who got their hand up? What's up, Empress?
So is that going to be for the revocable and irrevocable or and different other trusts? Because I know it's plenty.
It's talking about every trust.
Okay, you said DM you where so we can get it now. Because that's what I'm working on now, perfecting my trust the way I want it. Because I had one, but it's not sitting right with my spirit. So I want to redo it from the beginning the correct way. So I need that ASAP.
Yeah, it's on. If you can see the screen, just screenshot that right there and do what it say. Those of y'all just watching.
I got it. I just screenshot it. Thank you.
All right, those of y'all watching on TikTok, make sure y'all inbox me June the 7th. Listen, I'm going to tell y'all now, this is going to go fast. For $20, you better make sure you get in here. I don't have Cash App or Zelle. Okay, well, if you don't got Cash App or Zelle, I don't know really what to tell you, but that's how we taking it right now. And it don't take nothing but like 5-10 seconds to create a cash app. It don't take much. However you want to do it. But here you go. Get into class. One or the other will definitely get you into class. And I just showed you. It's a lot of information. Yes, it got it got a template in there about declaration of trust, etc. So it's in there as well. But that's specifically what the class is about, to get you off on a great start. But ain't no holding back. Now, am I gonna cover all 173 pages in it? No. We will definitely have us a PowerPoint, and we're gonna be going through everything pretty much. But the rest is gonna be on you to read fully. Right? Yeah. Y'all ain't finna make me do all the work. Y'all gonna have to read a lot of it. But we're gonna make sure that you have a great understanding of it. We're gonna answer some questions. We're gonna have a good time. And we're gonna spend some time in there, and maybe about 2 hours or so. Depends on how far, you guys take it. We at least do 2 hours for sure. So that's what we're gonna be doing on the 7th. All right. Also, the 4 recordings still left for anybody that's civil cases. It's $60 for all 4 recordings if you want that. And remember, every ebook is on sale still right now, 10% off. And June the 27th, we got the conference, man. How many of y'all gonna be in the conference? Or gonna be there? Either there or in there. Let me know.
I'm be there.
There or in there, one of the two.
I just want to know, man, especially if you're coming. That's gonna help. Just like I said, I'll make sure y'all get the flyer on TikTok. It's you. As a matter of fact, I think the flyer is in my story, so y'all, I'll just go make sure it's there. But I think it is. But yeah, man, it's gonna be a great time. We gonna have. We ain't gonna slip. Anybody got any questions though? Got a little few minutes or so.
Yeah, I got a question.
Go ahead.
Yeah, this ain't about today's class. It's about the trust. So in the trust class from 2024, I had to go back, and once I went back, it's a lot of stuff that I didn't even realize that was in there. And I had already been reading over the general post office, and I see you had that in there with the executive letter. And let me ask you, how important was the do you utilize that, or did you ever utilize that?
But I don't really. It's there. You can use it, but I don't utilize none of it, bro.
All right, all right.
I mean, I know
So
what you're
let me.
saying, but it's up to
hmm.
you.
So okay, because I ain't gonna lie, I was gonna use the general post office to what that was do the executive letter, for my mama for her mortgage. But now that you're saying that, I know so many other ways you can go about it.
For that mortgage, you already know what to do. Okay, you go attack it that way. You attack
Right,
it and deal with
right,
them.
right.
Yeah.
It's a headache. What the easy way I could do to redeem a lawful money?
With the mortgage,
Uh-huh.
nah, tender of performance.
Yeah, right. Right, the whole book.
But see, cause like, all right, this is what I was saying last night to people, and that was coming up asking me questions, right?
Uh-huh.
And I was telling them like, look, if you, how can I put this? If you make a claim, you got to prove it.
Right.
So they was on there saying like, yeah, they got the bid bond, the this that, and they got it all behind the clothes, and they selling selling these cases on secondary markets and all of that. And I'm like, okay, now if you make that claim and that's the reason why you want to say they lack jurisdiction for whatever reason, you got to go prove that on the record. You got to have proof of these particular transactions tying. And somebody was like, well, I got the QSUP number. I got this. And I'm like, okay, if you got all of that, you have to put it on the record as proof. And it has to be directly tied to your case, showing that the money is going into their accounts as beneficial interest to them. That would cause a conflict of interest in the case. You saying that shit don't mean a thing. So
And
when we
I
make
appreciate you
certain
saying.
claims, like, and this is why I say, like, my understanding is I'm always thinking admissible evidence. If I don't have any admissible evidence, I can't take this shit to court and win. You know what I'm saying? No matter how greatly everybody may feel about it, can you show direct connection and harm and injury, showing that this exists and that you can put it fully on the record? You understand? So, like, now, any claim that you make, you got to go and prove that claim. So that's why I say it's so easier to pull them out and make them prove their claim. Why go making claims to anything when they ain't proved the claim that they trying to make with you?
Right.
You feel me?
And I appreciate you even saying, I'm telling, I was reading, somebody had passed around a 50-page document. I was reading on executive letter, and I'm going through it, and I'm like, okay. But I forgot all about your tender
We've
performance
been
and
there, you know. We've
that's
been
great.
there at executive letters. We done that and
Right,
set
right,
them.
right.
But I'm trying to put you in a position to where I know it's a 95.5% chance you finna walk out with a win.
And say no more.
But if I take you to, if you go this other route, you got to do a lot of proving to where you're making them come up and prove anything that they asking you. Because why should I do anything until you show proof first?
Yeah, I'm fully understanding, man. Appreciate that.
Absolutely. All right. Now, for anybody asking about the Declaration of Trust ebook, you're not getting it into class. I'm not putting my. Now, if you want the old Declaration of class, you can go get that. It's up right now. But well, I put the flyer in the private group. Yeah, it's already in there, I think. But yeah, it's also on my story mode right now. So if you're on TikTok, it's there as well. Let's see. Nicole, how you doing, Miss Phillips?
Hey, I'm good. How are you?
Doing great, doing
Doing
great.
great, doing great. Yeah, I just wanted to come up quickly. I missed the testimony section, but just give a testimony. I've been doing this for a while. I've been following you for a while, and I just wanted to shout out um the season where you went over like civil procedure, and even though there's a lot of different ways that we've been able to do this in the private life, I had a situation where a case. And honestly, one of the cleanest ways that I've been able to win that, and it was actually three different cases that I went through, which is why I was missing for a minute, just applying what we learned. But three different cases. One was fictitious tag. One was a red light camera, and one was a suspended license one knowingly. And so to take from the trust and combine it with civil procedure allowed me to be on the winning side. So I just want to one say thank you and just encourage individuals to also look at the civil procedure process. I found that yes, we can remain private, we can move from the trust, but if you don't align yourself even with civil procedure, and a lot of people tell you to stay out of court, but when you're in there and you have to make an answer because silence does agree. I don't care what nobody says, silence does agree. Um, it's you find I found myself getting more favorable outcomes when I at least follow civil procedure. So I just wanted to shout that out and thank you. And I was able to come away with those three cases, and they were connected as a win. So I appreciate you.
Absolutely appreciate you and thank you for sharing that with us. Again, the rules of the court, both criminal and civil procedure, is what bounds the judge to do everything that's written within it. The court has to flow according to what is written. So that is the court is limited to its own jurisdiction of operation of the rules of procedure. And if you don't utilize them, then this is where people lose themselves at. Like, if you claim that you have rights, then you have a right to be heard. And just because you show up to a court does not give them jurisdiction, especially when you're there to challenge it, according to motion to dismiss because of lack of jurisdiction, along with the evidence and proof. That's not a general. That's not a general appearance. That is a special appearance. And you don't necessarily have to say, I'm here in a special appearance. Your special appearance is the fact that you're challenging jurisdiction. That is the special appearance. So with that being said, like, yes, it's very important. Like, you not showing up, unless they tell your ass don't come to court because they already dismissed it, then you might want to be there. You might want to go be there too, because you have a right to be heard. And they also have to protect that right for you. You have that right, right? Immediately. So these things is very detrimental to know. Again, like I say, we have to pick up the law and read and exercise our right, enforce them, assert them. And if not, then it means you choose to you waive a right to answer. You waive a right to be heard on any matter. You waive rights when you do not do what you have the power to do in a timely manner. In a timely manner. So I definitely appreciate you sharing that with us. And we have done a lot of things just privately, but as y'all can see, I don't speak on half of that stuff, executive letters and stuff like that no more, because I understand the pushback that comes with that. But when I put the rules and procedure and the laws, et cetera, the constitutional law and the statutory law they're trying to use, or whatever they're trying to do, and when I put that in front of their face, oh, man, and then I send them a notice of liability of their damages if now they know they can be in trouble if they act outside of their jurisdiction. They don't like that. They don't like that, not one bit. But if you go to try to doing other things outside of that, then now that's why you're going to say, man, I filed this, and they ain't answer. They don't got to answer. I filed the affidavit and the judge just didn't even read my affidavit. It ain't the judge's duty to read your affidavit. It's the plaintiff, the prosecutor, or if you in a civil, it's the plaintiff. It's their duty to answer an affidavit. Not the judge. The judge is only going to do anything according to him being moved to do so. If you say objection to something and then you give the reason behind law and procedure that says that they have to do or to do, then they will sustain. The judge has to move, right? But if you don't, then that means you waive a right at that particular time. And there's a lot of lawyers that will take your money, make it look like they working the hell out your case, and then you get in a trial, and then they're going to fail to object to something that they were supposed to, which is literally going to kill everything that you can do and appeal to. And they'll do it on purpose. They will lose on purpose and just took your money. We tried. We did the best we can, man. I got you the lowest plea deal I can get you. Shit, me, and you didn't object to this or that, they will do it. Because they didn't sit down with the prosecutor and the judge or whoever who's trying to get a promotion and say, hey, man, this is my big case. It's one of these cases going to help push me over. I need you guys to figure this out. I need this one. Yeah, they want to move up district attorneys and settle and all of that type of stuff, want certain promotions, man, they will go after you. And I keep telling you, their job is to prosecute you. Their job is not to find a win for you. Whatever charge, et cetera, is brought in, their duty is to prosecute you according to the evidence that they have. They're not your freaking friend. Their job is not to win or find a way to show that you can get off the case. Stop thinking like that. They don't care if your damn evidence is right, wrong, whatever, or if you don't understand procedure with all this other different stuff, then I'm telling you, they don't have a feeling for you to win. They don't care that you're about to be locked up. Not that doesn't serve their purpose. Their job is to make sure they prosecute you according to the charges that's coming into their court. And if a prosecutor brings the prosecution towards to charge against you, he better have enough evidence, because if he start losing, then they finna get him up out of there, because now you working on getting what? Everybody sued because you keep trying to prosecute something that you don't got evidence to do. Now it turns into malicious prosecution, maybe even false imprisonment, etc. too. Y'all understand what I'm saying? Understand, overstand, however you choose to say.
Yeah.
Hey, listen, Luke 11:46. Woe to all you lawyers, for you cause a burden to your people.
Say that again for him.
Luke 11:46. Woe to all you lawyers, for you cause a burden to your people.
Yep. So that means the people need to know something. And if you don't, it ain't my fault. It's not their fault. Their job is to make sure they don't protect and serve people. I keep trying. They protect and serve what? What do they protect and serve?
Should the state?
The law.
So,
The law. They protect and serve the law. That's it. Not people. People' job is to protect and assert their own damn rights. That's it. It ain't their job to assert or protect not one right for you. They ain't got to protect no right that you ain't asserting or raising. None whatsoever. That's not their job. Their job is to serve and protect the law. Literally. Nothing else. Now, they supposed to serve the law if they catch you doing something, violating something that leads to some criminal activity or whatever the case may be. They have to serve the law according to the charge and the procedures that it takes to do it. That's protecting it, making sure they follow in due process. Following due process protects the preservation of the law, which means that they're of what they're trying to charge you with. If they not doing that, then now they finna follow on the wayside. They finna turn into a criminal. Mm-hmm. They finna turn into a criminal. Oh, it's a thin line. If you get on that other side, you want to be a public servant, etc. It's a super thin line. You do anything outside of that, just like that, you went from being a law enforcer to a criminal. Excessive force, criminal. Criminal activity. So with. So yeah, it's thin, guys. But we just gotta be knowledgeable of all of this, from taxation to every bit of it. You know, that's how this is a daily study. This is something that we get up and study and do every day. Read something that's in relations to the law every day. I don't care if a damn if it's just to read the Constitution or a minute at a time. But you better read something. This has to start being in your life. Not having this in your life is literally causing you harm, whether you realize it or not. All you got to do is focus on and look at the world and the situation today from an individual standpoint, etc. And if you're not looking at it from that way, then that's where the problem relies. So let's change that. Let's change how we do things, because what we doing is not acceptable to how the world looks today. And that's a fact, right? A big fact. So, with that being said, guys, that is the end of our class today. I was waiting on Brother Larry. I think Brother Larry might be busy today. I was going to see if he was going to come give his testimony. He said he won 2 cases, the debt case that he had and another case he was telling us about that he told us about from the beginning. So I wanted y'all to hear that. But we'll get to it sooner than later one day. But keep grinding, guys. Keep on grinding. Make sure that you're there. For those of you guys are going to be in Wednesday's class, this Wednesday, which is the evidence and proof class, We will see you guys there. See, y'all thought I forgot about that, didn't y'all? Y'all know who y'all is, and anybody else that interested in it as well, then you can go to the website in GodWeTrustAcademy.com and look up the evidence and proof class, and you can join that class on Wednesday. But to those that's already in it, don't forget, it was a few. Ricardo, I hope you remember this time. You do know that, right?
Yeah, I'm in the. I got you. Thank you.
I making sure. Cause this time we're gonna make sure we get it done. I ain't gonna stop. So everybody know we've been had it. We know from last month, and we're gonna keep it moving. We still on episode. We just on 3. We still got 7 more to go in that. So we're gonna get it done though. We're gonna get it done for sure. But and that whole series is available right now. You can go look up the Lawman series on InGodWeTrustAcademy.com if you just want to do it yourself. All 10 ebooks will be sent to you, and you can study for yourself. And again, when I'm done doing all of this, you will have a major law library. That's the plan. To make sure that you have a major law library at a very affordable, very, very affordable price. Because what I will say is this, it's books that cost $1,000. So I'm actually having a lot of those books, and I'm taking them and I'm putting them into series so you can really have a true understanding and breaking them down and giving it to you that way at a lesser cost, which is why I say a $200 for a 10-book ebook series that I paid almost anywhere from $1,000 for. Yeah. I'm I'm making sure you get what you need still. But at the end of the day, keep studying as well. Keep studying. Don't stop. Appreciate you guys for your time. For those of you who rock with me, etc., just know I'm always on TikTok at night, during the day, whatever. So make sure you follow me on TikTok. Go look up the Lawman, and that's where I do a lot of stuff as well on there. So if y'all be looking for me, like where I be at, I be on there a whole lot. So catch us there at nights, during the day. I was going live on Facebook, but as I can see now, it's only 3 people on Facebook. That's how I know they've been shadow banning me. So I've just been sticking with TikTok. I ain't got time to play like that. They do it. So if y'all ever see me live, like did any of y'all get a notification I was live on Facebook today?
No,
Nope.
See what I'm saying?
I don't get no notifications about the private groups that you was. Do you still do that on Tuesday in the private group?
Nah, I'm just now finna get ready to be back to do it since the children out of school, but I've been doing other things. So, I've been
Okay.
not having time since school been closing out and having to be places. But we definitely about to get back started on episode 4. So we can jump on there tomorrow if y'all willing. But so.
I thought I was missing out. I ain't even gonna lie.
Nah, but what I have done is I will sometimes just like post a old episode or something in there to give everybody something to watch as well too. So that happens as well too, because it's a lot of new people in there that don't and haven't seen a lot of work sessions and stuff like that we have had. So you will be seeing older episodes and things like that drop in there as well. But again, don't miss out on this trust class for $20. That's all I'm saying. If you do, man, and it ain't gonna be $20 when we done. I promise. It will not be $20 when we done. So get in the class, right?
I
It's-
sent
I have
my
to catch
email
the
already.
online, man.
you say what?
Yeah, I
Hutch?
grabbed mine.
So I'm gonna have to catch the online because of where I'm grinding right now. I got a
Yeah,
crazy
it's gonna be
schedule.
online. The trust class is online. It's not in person. The trust class is literally online and online only. But like I said, it's
And
two.
that's just like you did the affidavit airship for $50 a few years, man. That thing, truth.
Exactly, and this is gonna be just like that times 10. So, like I say, it ain't a. We got a lot to go over, but we're gonna make sure we get it done. It's 173 pages, like I said, in total. So we're gonna talk about what is a trust, the power of fiduciary, choosing the right trust structure. So you asked me what all trusts are we speaking on? revocable, irrevocable, family trust, business holding
Oh
trust,
yeah.
land trust, intellectual property trust, ecclesiastical ministry trust, dynasty and generational structure, hybrid trust, and etc. We're going to talk about that. The anatomy of the powerful trust. We're going to talk about building the trust, building the Schedule A, conveying property into the trust properly, etc. Funding the trust completely in different ways. It could be, retitling assets, banking structures, trust-owned business, holding company structures, trust-owned LLCs. We're going to talk about it all. So, privacy and confidential estate management, probate avoidance and court prevention, as much as possible. Some things, still, even though it's still in trust, still might have to be probate. You never know. Family legacy and generational wealth continuity. Business, commerce, and intellectual property as well going to be spoken on. Land and real estate protection, how to go about doing that. Fiduciary administration and compliance, very important because record keeping, that's going to be spoken on. Preventing court interventions through competent administration, pretty much kind of what we talked on today. And then advanced structure and enforcement, holding trust plus LLC structures, family office structures, layered assets. Like I say, this is not just because it's $20. I promise you, if you want to downplay the value of it, then you gonna all right. Downplay the value of it, you want to, right? So this is definitely a chance for those who have to deal with trust classes, and I can understand they can be very expensive, but they should be. To be honest with you, it's a lot of heavy information and things like that to go along and about it. And it also helps you know who's serious and who ain't. So I'm giving y'all a chance right now at $20 to see how serious you are. Yes, it's a lot to read, but it's going to determine how serious you are into setting up your own trust, since you feel like you don't have maybe thousands of dollars to go set up a trust. And I can understand that. But some people say, well, why people charge so much for setting up a trust? Like, what happens when you run into somebody with millions of dollars worth of assets, and you're taking, they got over 300-400 assets that they're trying to put into the trust. That is a lot to deal with. So you might undercharge yourself if you ain't careful. But I've ran into somebody that had almost 75 properties, and I'm up 3-4 nights conveying shit all damn night. Yeah, all right. Never again will that happen for the price that I did that for. And that's when I was a beginning at it. It was like one of my second trusts that I did. I was up all night. I was like, I will never, ever do this again. This has been 2-3 days. And on top of somebody taking forever to send you the stuff as well, too. So it takes a lot for you to wait, be patient.
There's an object on road ahead.
There's a lot to go with it. So, but I love to do this. This is what I love to do. So, like I said, we're giving you guys a chance. And those who want to take this chance, this is, like I said, this is not like a little small pamphlet. Nah, this is the real deal. Real deal. Information that you're gonna have to pay at least $300-400 coming out of another book. I promise.
Hey, Eric, you're gonna have to give a disclaimer when you're doing people trust, like they'll do it those all you can eat. They'll say all you can eat, but 8 plate limit.
Yeah, I feel you. I mean, but the disclaimer is already, it says that it's up to, like, I'll say up to, well, starting at a certain amount. And the reason why I say starting at, because if it depends on what else you want me to do in the midst of what we doing, will the price go up while we in the midst of adding or doing stuff? Because I'm not going to just sit there and, not going to do that. Unless I specify that it's half off and this is what it's going to be at this price no matter what. And I usually do that for people who I know who are less fortunate and you ain't really got much. You just you want to start your legacy. And I'll do that as well. I try to meet people as best as possible for their budget. You're not going to get better than $20. Now, if you can't come up with $20, we need to reevaluate fucking life for you. Seriously. We're here for intervention for you right now. I promise. Because I know people whom you will laugh and talk about that can make $20 a day. And they're going to do that solely for they habit and some. So trust me, you can make $20.
Oh, yeah, They gonna find some junk food every day for $20.
Oh yeah,
That part.
I'm just saying, like, just even for they, I'm talking about just the person that they're gonna talk about. They'll talk about the crackhead, but I guarantee you that crackhead can come up with a couple $100 for the day of with guaranteed.
They sure is. What? You better know it.
I promise you they will. I done watched them do it too many times. Hey,
And the alcoholics as well. They gonna make sure they had their drink.
they gonna
So
come up. They
yep.
gonna make sure they get that money. Something finna happen. Man, they finna go get some scrap iron. They finna wash some cars. They finna come through, clean your house, make some money. They gonna find, hey, you got some work? What you got? What can I do? Let me cut your grass. Let me wash your car, man. You just washed it yesterday. It's dirty today. Yeah, you went down. Let me wash your car today. They gonna find a way. I promise you. They will go look and observe everything going on with your crib, whatever. Like, look like your dishes and stuff nasty in the kitchen. Give me $10. I'll wash your dishes. I'm telling you, they gon' make that money.
Yeah, they functional in 2026. Now it ain't like back in the 90s. They functional.
Man, they gonna get that money, bro. They not playing. But the whole point of me saying that is you can't have no excuse. What's up, Empress?
Okay, so quick question. So for the ones that already sent theirs or whatever, the receipt and everything, we gotta wait for the book until the 7th, correct?
Yeah, yeah,
Or do
yeah.
we get it now so we can
No,
go and get
I
started?
ain't gonna send it right now because it's gonna get out
Okay.
before the class, and I don't want the book out before the
Oh,
class.
now who would do something like
Shit, a
that?
lot of
You know
people,
what? You're right.
a lot of fucking people. Trust me. We get people asking like we'll be dropping the class. Let's say we do the class. Let's say we send the stuff out to y'all on the day of class. We be having people
Mm-hmm.
that's not even in the class asking for access to the book on the day of the class. Shit like that happens. So I
Oh,
know if I
wow.
do it now, they would definitely it'll already be out. Wouldn't take 5 seconds.
That's horrible.
Not saying you would do it, but I'm just saying people will
No,
definitely.
no, I understand. I mean, I get it now that you're saying that, but that's just so sad and then disheartening. But you right.
Oh,
I
it's
just want people to just be better. If that, I'm gonna pray on that.
well. I mean, it's just that's that right there. That's a little problem that could be fixed. What bothers me and what we had to fix was this. We had people taking a full class, getting every single thing. We send it to them, etc. And then they'll go make a claim talking about, oh, well, I didn't receive all of the stuff in the class, or the class was not what I thought it was. And they'll do it like a chargeback or something. And then they just like, they'll go block me and disappear. And I'm like, look, man,
Oh no.
like if you really want it, and I understand that you're not gonna get nowhere anyway with what you're trying to do because you're looking for something easy. And when you go to looking for something so easy and you don't want to sit down and read yourself, it's over with. But yeah, man, that person that took 3 or 4 of my classes and then waited and went back to a class that was been done 3 months ago, 4 months ago almost, and then gonna say, oh, I wasn't satisfied. I said, man, yo, no, you mean you broke. Yeah, that's what you saying. That's what the fuck you mean. You're broke right now. And you're trying to find the easiest way to do this. And I've had a couple people do it, but we put a stop to that shit. We had one dude, he'll come through and he'll order about $2,000-$3,000 worth of shit. And I'm serious when I say this. Pay for it, and then they'll do a chargeback on it. Man, when I say we became private investigators, we found out the IP addresses in the same vicinity where they live at, how many accounts they keep doing this with, except once we found that out, boy, we got that. We were ready for them. As soon as they ordered another one, got their ass. Huh. No. They thought they was gonna get away with it, and we won the case. Get on, get now, get the. I'm glad that we went through that, cause now we know how to handle that. But we prepared for y'all asses now. Y'all was getting me. Yeah, or I'm talking about for real, y'all. $2,000-$3,000 at a time. So now, if you make a big
That
order,
is just crazy.
now if you make a big order, guess what you got to do? You got to call me. We're gonna have a conversation. It will be recorded too. Yeah, you're gonna have to sign certain things and all kind of other stuff now. So if I see anything at the threshold of an order, we pick up the phone. Yeah, you got to have a conversation. We got to have this on the record. Matter of fact, identification. Send me your picture. I need to know it's you. for identity theft. We do identity theft protection over here. You have spent a certain amount of money that we need to identify you, and we're gonna need a picture to do that. That you in the name of the card, or if you use somebody else's shit, we're gonna need some paperwork showing that they gave you permission. Otherwise, we ain't fulfilling the order, and we ain't even gonna refund the money back. We finna report this shit. We ain't sending no money back. We gonna make sure we get to the bottom, so we can send it back to the right person and not your ass. Because people will do that too. They'll use somebody's card, send it somewhere, then they'll make you send the money somewhere else to them personally after they took somebody else's money. I done seen that too. So yeah, y'all some little snaky little bastards out there. Not to my good people, but it is some out there. Boy, y'all rough out here
They
with that.
boy.
Those
They
maggots,
rough, bro.
man.
That's what I said. They rough out here with that scamming, boy. Shit, I said, damn. Boy, you wake up, and it was funny though, cause it happened every time. Like every time we got done with a work session, like a full season, they would do it. They'll go buy the whole season, load up, in about 4 more other classes. All the high price classes they could get, they would do it every time. I was like, man, we got to stop this. Because what happens is my information is just gone. And then, PayPal was saying some crazy stuff, talking about what they can't do. And it was a lot, though. But we've been through a lot with this. I still do it because I love to do it. There's been many times I questioned about doing any of this, for a lot of times because of way people try to take advantage of shit. And it's like, dang, dude, you know, you really gonna do me like that? Like, you could have just stuck around for, if that's the case, because like when I get ready to teach a class, I'm already teaching you the class to prepare your mind for the class. I do it leading up the whole way. If you ever been in my classes and watch me on live, is that not what I do?
Yes, it is.
Always, every time.
You see what I'm saying?
Oh yeah.
So you ain't have to take no that. You ain't have to take the class. Like, you know what I mean? And that well, basically that's stealth. You stealing. You ain't have to do that. You could have just sat there, listen to me on these lives, write these things down, go check it out for yourself, and you'll see for yourself. But man, you know how I go. You know how I
I
go.
do got one more other question. One more question, and then I'm gonna let you go.
All right.
Okay, so the guy Jamil, I think, I apologize if I'm saying it incorrectly, but he was saying, asking you something about the mortgage for his mom, and you told him to do the tender by performance. So even, okay, so in my case, um, that I'm helping somebody with, she had sent in requesting them accounting and things of that nature, and chain the title and all that good stuff. And they never responded, but now they sending the notice, and no, the intent to foreclose now or whatever.
Yeah, but now you got
So
you. So if y'all already did y'all private administration,
yes.
they defaulted.
Yeah, pretty much, yes, because they've not respond. They haven't responded to nothing that the first two um notices that we sent out to them. They ain't responding either one. And then they turned around and sent the new promissory note they wanted her to sign, and she didn't. She signed it, but in the way of signing it in a proper manner, and like crossed out some stuff and everything so that they wouldn't have, certain rights and titles and stuff. But she also sent instructions with it, and they ignored that too.
What?
So what should she do? Should we
But
do the
but
tender of performance, or should we default them out?
I mean, if you
Because
already,
that's what I
but
was working
but see,
on.
if you already defaulted them out, that's what I like. I'm already at equity court of equity doing the declaratory judgment.
Okay,
Is it a
so
judicial or non-judicial state?
judicial state.
Okay, well go
I'm
get
in Maryland.
go do a declaratory judgment right now on the situation. You don't gotta wait. Like, if you already did everything, they didn't perform, they didn't show you any form of of authority that they have the right chain of title, chain of assignment of the
Hmm.
deed of trust, etc. If they don't, if they're not showing any of that, go to court now yourself. Now it keeps them
Okay,
from
so
filing.
Okay, got you. Okay, cool, cool, cool. I got you. Thank you. Appreciate
Because
it.
now they have to come answer to what you say, not you answering to what they say. Because now they're gonna come at you like, "Is this your contract?" You know what I'm saying? Or or whoever your client is this your contract? That's what they're gonna say to them. You know what I'm saying? And they're gonna answer you like yes or
Uh-huh.
no. And now all this other stuff that you asking for, they don't have to validate it. But if you bring them there because of to the court of equity because of the lack of performance, so you can accurately perform, these are the things that you need to accurately perform your obligation. So you want to be discharged of your obligation. It's not necessarily the debt, but it's the obligation. It's to fulfill the obligation that you have. And you cannot perform because they haven't performed. They haven't accurately shown any proof of authority for you to perform in an accurate manner that you're seeking to do so. So now you want to be discharged of that obligation. That's what you want.
Discharge of the obligation. So do a declaratory judgment in reference to them not responding and them defaulting on the request that she asked for, correct?
Yep, there you go. And they have to come answer for that specific reason.
Okay, cool. I'll be back with the
And
testimony.
then they just tried to accelerate it too, right? So now you take that notice
Yes.
to accelerate it, and now that means they have to have proper enforcement as well because they're trying to accelerate a debt.
Okay. All right.
Yeah,
I got it. I got it. Okay, I'm on the right path then. Thank you. I appreciate it.
absolutely.
I'll be back with the testimony.
I already know that. I already know that for sure. Well, guys, I'm finna get ready to go make a casserole. I don't know what kind yet, but I'm finna figure it out today. I'm in the cooking mood. So I appreciate y'all time today. I'll be back on later, supposedly. But I can't wait to do this declaration of trust class. Remember, go tell your people, your friends, whoever y'all know on this journey, hey, it's $20 over here. You know what I mean? It's $20 over here right now. You can learn fully about trust. It's something to put in your home to continue to pass on. And I'm gonna show y'all, yes, there is, because everybody like, is it a template in there? Yes, it's right here. It's a do-it-yourself template. And it's to the max, right? I want you to understand that. Now you can shape it and do it whatever you want to with it. You don't necessarily have to take that for what it's worth. I know a lot of people say, and if there's words in there that you don't understand, then you need to make sure you either go read and understand the words, or you need to put words in there to make sure that you have an understanding of those words, right? A trust has to be to the people who are involved in intellect, their understanding. So it don't have to all be what you would call legal terminology. Like it's up for your understanding. It doesn't have to look like a lawyer wrote it. I just want you to know that because it's just an agreement and giving powers, etc. And as long as that is understood and it becomes a contract, then it is what it is. But that's gonna end it for us at this particular work session. We will have work session Wednesday. We're gonna do it early. Early. I'll do work session with y'all Wednesday 11, and then we at 6 p.m. that night we got uh, our class, evidence and proof. Right. So ready to start that off with y'all. All right, y'all have a good one. I'm out of here. Peace.
All right, man.
You take care, man. Take care, y'all. Have a good one, y'all.
All right.
Yo, now.